Hey everyone, great to have you back. I'm Anselm. So let's talk about what's been happening in the Bitcoin market, because Strategy just went ahead and bought more Bitcoin. Again, according to their latest Form 8K filing, between June 8th and June 14th, 2026, Strategy raised around $209 million in net proceeds through its ATM stock issuance program. Out of that, they put $100 million straight into Bitcoin, picking up 1,587 BTC at an average price of about $63,024 per coin. That brings their total holdings to 846,842 Bitcoins, with a total cost basis of roughly $64.07 billion and an average holding cost of around $75,656 per Bitcoin. Now, here's what I actually want you to focus on, because the real story here isn't just how much BTC they bought, it's how they bought it. Strategy didn't pull cash off their balance sheet. They went to the stock market, raised fresh capital, and then converted part of that into Bitcoin reserves. Think about what that means. They're essentially tying their capital markets financing engine directly to the growth of their BTC holdings. For a typical company, buying Bitcoin is just an asset allocation decision, a line item on the balance sheet. But Strategy has made Bitcoin the core of its entire corporate identity. As long as investors keep giving them financing capacity, they can keep stacking BTC. And the more BTC they stack, the more the market sees them as the Bitcoin company. It's a self-reinforcing loop. Now, worth noting, this latest purchase at $63,024 is actually below their overall average holding cost of $75,656. So they're buying the dip, effectively lowering the cost basis on new positions. But let's not sugarcoat it, the risk is still very much there. Their overall average cost remains high, and any significant drop in Bitcoin's price will hit them from multiple directions at once: asset valuations, stock price, and their ability to keep raising capital. So every time they buy more, it's both a long-term statement of conviction and a real-time stress test of the whole model. Zooming out a bit, what we're really watching here is Bitcoin entering the corporate capital structure in a meaningful way. It's no longer just something people trade on exchanges. It's starting to reshape how public companies raise money, how they're valued, and what their balance sheets look like. For a long time, when people analyzed Bitcoin, they looked at price, on-chain data, derivatives, leverage, the usual stuff. But now, you also have to watch how companies are financing themselves, and whether the capital markets continue to back these kinds of BTC reserve strategies. From what I'm seeing on-chain, the most important thing about Strategy buying 1,587 BTC this time isn't the size of the purchase, it's the path of the capital. Raised in public markets, converted into BTC reserves. That's the signal. So, wrapping up, Strategy buying again tells us that corporate BTC treasury strategies are maturing. They're moving beyond simple buy and hold into something more complex, using capital market mechanics to build BTC exposure. That can amplify the upside in a bull market, but it also amplifies the pressure when things get volatile. Remember, price is the outcome. Capital behavior is the cause. I'm Anselm. I don't predict prices. I track where the real money is actually moving on-chain. If you want more of this kind of analysis, make sure you subscribe and follow. See you next time. Let the data do the talking.